Hello, hello, and welcome to May 6th. Alphas have another win on the scoreboard with CVS exiting at 146%. Let's go look at that chart. There it is, CVS. We had a 152% yesterday. We went to last bar close. That's what this was. So the close was here, and we set our stop slightly below that close, and it opened below the close at 82.64. We had our stop at 83, and thus we got taken out right at the beginning of the market, and we picked up $532 for the one contract. One contract. If this account gets bigger, and as you can see, it's growing. We have 7,300 today. I'll get into those numbers later, and we have a buying power of 3,000 and a half, 3,500 thereabouts. So the bottom line is that two or three contracts, this would have been a real, even better return. But still, the percentages are 146. The return was 532 minus $2 for fees with a $530 net profit for the trade against 1750 on the O with a now new O of 1220. That's what the whole purpose of this strategy of stochastics and losers become winners is that you're going to have losses. You'll recoup those losses. If you're going to be a loss leader like I am, you'll just stay within your little niche of watch list and be right there. We had a gentleman last week, Jim Schedar. I want to give a shout out to him because he had a great quote, and he is enjoy your lifestyle. And that's what trading is all about. Enjoy your lifestyle. And the bottom line is that now he has a watch list, but his watch list is of the S&P. I believe it's the S&P top 20. S&P top 20%. I believe it's the S&P top 20% or the S&P top 10%. It's the S&P 500 he bases it on. But the bottom line is he is also been a very successful trader. And I wanted to give a shout out to him because he was inspiring with that one quote, enjoy your lifestyle. So here we are. We are getting in, showing here what we're working on with stochastics that we recoup your losses. Moving on now, we have T now is in second lead for the account, and there it is. Oh, there it is. There it is. So now here at T, now T initiated already its dipper low rule. Rule number 5, less than 60 days to expiration, and we are less than 60 days expiration to June, and it's a solo June left. That's it. And it's now got a dipper low right here. I can zoom in a little closer, and you can see the dipper low is right here ever so slightly. This was, the low was 31.11, and then this came out to 31.05. And then we got the high on the right. So we had the dipper low. Now we had a nice little down drop today. Tomorrow we anticipated we can get a higher low on the right side. This will become then the new dipper low for T to exit this, to start working toward exit of this trade and collect that profit, because this owes 37.61. Yes, you do. $3,761 is being owed on this, and we only got one contract in place. So it's going to, like I said, this is going to be around for a while, but eventually, as you see, rocks become pebbles, pebbles become profit, and profit does pay back. All right, that takes us now to Capri at 60%. Come up, Capri. There is Capri, and Capri is sitting here at, and Capri achieved this third close above the third ratio. It's now formed a, now this low is here. It looks very close to this one, but it's not. It is not. The bottom line is it's right in here. This is the low we're at 55.79, and this low today came out at 56.43. It's only a few pennies up, but it's moving in the right direction, and we just keep at it. This one also owes a big money of 43.31. So these two are going to be around for a little bit while longer, but it's moving in the right direction. That takes us to RTX. RTX is here, and RTX has achieved this third ratio. It closed here on the third ratio right there, and there it is. So a little bit tight in the zoom in, but you can see that it was ever so much. Now, yesterday, Thinkorswim must have some kind of software problem because some of the candlesticks wicks were into the body and not down where they belong here. Very strange. But the bottom line is we calculated out and we got our dipper low stop here, and now we have another higher low, slightly a higher low here. So we'll see if we can get a higher low to get out of closing out this trade. So RTX, that takes us to T minus. Now, T minus gets a special attention here, and this is why. T minus got into this trade with a very, very bad fill. I mean, we're talking bad. $1.45. That's how bad this was. Back in January 26th. And we are in now. This option happened to be way out in August, so its 30 to 60-day rule will not initiate until August becomes July, July becomes June, until June. But the important point is it closed above the third ratio. So we have now a dipper low. Now you're going to say, well, wait a minute, we had a dipper low down here. Why don't you use that one? That's not fresh. You want to go with the fresh price action. Down here is where your buyers came in, not over here. It's too late. Look, it's already gone past the gate. So now we'll be watching this out. We're at 30%. Who knows? It takes off and runs to 100 ROI, all the better. All right, that takes us to IAU. And IAU had a big jump. I don't know. Maybe the commodities are finally coming back. It's still way below its third ratio, but IAU is July. So July to June, June to May. So May 16th, starting on May 16th, and thereafter, we are going to be automatically going to dipper low, which is looking at right there. And we'll start to work our way toward the exit and to get out of Dodge. Okay, with that said, let's review the numbers here. We got 7,300 was our capital today. That takes us for year to date from 7,300 minus the initial of 55.33 of January 1st. 1767 is our profit against our capital of 55.53 with as a percentage, and we are 31.9% ahead today, year to date, on alpha. Let's go look at where is the SPY. Oh, before I leave this, because we're not coming back, we have a buying power of 35.33. So we got to run the scanner. So let me do that, guys. Today's special is, let's see the scanner. So here is my scanner panel, and here is my load. And you can see that I am a big creator in scanners, constantly going on for years going on. Currently, we are doing stochastics downtrend strategy right there, based on weekly components. All right, let's close that up so we can see what the field's going to produce. And we are going to go to the alpha account. It also was one of my accounts. Alpha is right here, and run it. So this is our scanner. You're actually seeing a scan for today, if nothing. So what does that mean? I don't have to work on that part, but I do have to work now on the downside. So we come back here and run the downside of the scanner. And you can see DMI. I am working on DMI. That's in the laboratory. We're trying to see what we find out something there. Come back down here. Now we're going to go to weekly uptrend. And you can see some of the components. We'll go and close this up so we get some more in the field. And that was the DMI results. Let's go look and see what alphas are going to do. And we run alpha and nothing. So one of the problems we're going to have is we're going to have 33.53 sitting on the sidelines until the scanners come up with something to entry. With that said, let's go on now to our closing. And that is, look, the SPY is 11.44, and we are at 46% on that. But you saw earlier over here, we are 31.9. And with that said, thank you very much for stopping by and checking it out, and celebrate the celebration.